providing.
All right. Thanks so much, Tristan, David. Thanks to let me start. Thank you to NHC for the opportunity to talk about the Federal Home Loan Bank Housing Goals proposed rule. Thank you, all of you, for listening in and for your interest, and we hope your comments on the proposed rule, which I think most of you know, probably are due on the 31st, a week from today. We have spent a lot of, put a lot of effort into getting the word out about this rule, and I think the timing today is great because I think a lot of people are have read it, are focusing on it, and sort of developing their thoughts as they put their comments together. So I will go through a description of the rule and our thinking and of the reason we did various things, and then have a lot of time for people's questions. One last thing beforehand, I want to thank Ethan Handelman and Mike Price and Danielle Safran they are really the ones who put this rule together for FHFA. They couldn't be here today. I'm filling in for them, but I absolutely want to acknowledge all the work they did on, I think, a very thoughtful proposal. So let me start. Hang on a second. I'm not advancing here. Okay, so we should be on slide 2. So before describing the proposed rule, just a little background about the Acquired Member Assets Program, also called AMA. AMA allows the banks to buy single-family mortgages from their members, and the housing goals apply to AMA purchases. So first, a few important points about AMA. First, the structure. When a Federal Home Loan Bank purchases a mortgage from a member, the member keeps the credit risk while the bank takes the interest rate risk and holds the loan in portfolio. We'll come back to the importance of that. Second, just quickly, the volume. AMA purchases are a very small part of the secondary mortgage market overall. The pie chart here shows market activity in 2017, and as you can see, AMA purchases are about 1% of that total, compared to much larger numbers you see there for Fannie Mae and Freddie Mac and Ginnie Mae. And then the last point is that AMA is voluntary for the banks. They operate AMA programs at their discretion, and they could cease purchasing mortgages entirely if they chose to. On the next slide, slide 3, the housing goals are required by law. I think it's always important to look at the details of the statutory language when you're starting out. The goals were added to the Bank Act in Section 1205 of the Housing and Economic Recovery Act of 2008, often called HERA. And the language actually is pretty brief. And this slide just shows some of the key portions of it. First, as you see in paragraph A, the goals must be consistent with the goals for Fannie Mae and Freddie Mac. That's what, as you see there, that's what Section 1331 through 1334 refers to. However, the language also says the goals can take into account that the banks are different in several ways and are tied to their unique mission and overall ownership structure. So as we go through it, you'll see how the proposal considers and addresses those differences. So on the next slide, let me start by describing the existing regulation, which took effect in 2011. One element of that rule is the volume threshold. The goals only take effect under the current rule if a bank purchases more than $2.5 billion in mortgages through AMA in a year. If the bank purchases less than that amount, the goals are not in effect. As of today, banks have only exceeded that volume threshold 3 times. Otherwise, the banks have stayed below the threshold, and so they have not had to address the housing goals. Second, under the existing regulation, the goal categories are the same as the goals for Fannie Mae and Freddie Mac, which are listed on the screen. There are separate goals for purchase mortgages for low-income households, very low-income households, families in low-income areas. Excuse me a second. And then there was a 4th refinancing goal for refinancing mortgages for low-income households. And lastly, under the current rule, FHA evaluates whether the bank met or exceeded the market share within its district by comparing bank purchases to market data collected under the Home Mortgage Disclosure Act, or HMDA, which is released, many of you know, in the following year, the year after the goal applies to. So moving to slide 5, when we start talking about some of the challenge with the current rule, that data lag, I'm sorry, I'm so busy talking, I'm not advancing the slides. Thank you, Tristan. So altogether on slide 5, that data lag, which I just mentioned with HMDA, because of the timing of HMDA, banks don't know the required level of mortgage purchases or their goal until the year after the purchases have been made, an obvious challenge. The second challenge is that over time, the volume threshold is operated as an upper limit on the bank AMA programs. Remember, the banks below the volume threshold in effect avoid the housing goals, while banks above face the housing goals. It has acted, as I said, as sort of in effect as sort of a ceiling. I mentioned already that AMA is voluntary, so if the goals are too onerous, banks could choose to stop buying mortgages. And lastly, this is a little technical, but it is important, or in the details. But under the current rule, when FHA evaluates goals performance, we compare all of the bank's purchases, which can include loans from inside and outside the district, to market conditions only inside the district, which is an obvious disconnect. And we, in our analysis, this was much more severe for some banks than others, depending on, because of the banks use their programs in different ways. All right, so what? Oh, what about the questions? Okay, so I'm being told, sorry, anyway, if you do have questions, I believe you can type them into the box that's available on the webinar. Is that accurate? And I absolutely would love to have as many questions as people have. What do I press here to advance the slide? Oh, awesome. Wow, all right, I'm getting warmed up here. So, yeah, but what do I do to make it go back now? Go back the other way. Okay, cool. All right, I am on slide 6. So the proposed rule aims to address the challenges that I just described. So in the following way. So our main aims, I would describe first as we want the rule to be meaningful in that they encourage, or the goal is to be meaningful, they encourage net new affordable lending to households in need. 2, also achievable, so that the banks will continue with AMA. Forward-looking, so the banks know how to aim their activities within AMA, that's the data lag that I mentioned, and adaptable to fit the needs of different Federal Home Loan Bank districts and the different ways they use their AMA programs, and much more on that in a minute. The proposed rule aims to encourage the banks to make affordable housing part of their business plans for AMA mortgage purchases, so that they can fulfill the obligation in statute in a safe and sound manner. So now let me move to the next slide and start to talk about what the rule actually proposes. So the first change is, instead of 4 separate mortgage purchase goals, the proposed rule would create a single housing goal that is prospective, that the banks know ahead of time. 20% of each bank's AMA single-family purchases must be affordable and meet the goal in a year. And I'll talk more about those criteria in a second. Next, the proposed rule would also add another goal for small member participation. It would require that 50% of AMA users, the members that sell the mortgages to the banks, be small institutions. And it uses the existing definition of community financial institutions. If a bank is below 50%, it need only make annual progress towards the 50% during the year. The rule would also create a way for banks to propose their own target levels for either the 20% purchase level or the 50% small member level. And to do that, a bank would have to justify its proposal and receive approval from FHFA. The proposed rule eliminates the volume threshold, so goals would apply to all banks that use AMA. And the proposed rule would also simplify what counts towards goals, which is currently somewhat complex, to focus on AMA loans. That means federally backed loans could count if purchased through AMA. Okay, and slide 8. All right, so this slide looks in more detail at what mortgages would count towards the goals under the proposed rule. As I said in the last slide, the proposal combines the 4 separate goal categories in the existing regulation into a single prospective goal that includes loans to low-income borrowers, which is the green bucket, very low-income borrowers, yellow bucket, or borrowers in low-income areas, the blue bucket. The statutory definition of low-income areas allows loans to higher income borrowers, above 80% AMI, to count toward the goal if they reside in low-income census tract, a minority census tract, or a disaster census tract. And I'll talk more about that in a minute. The rule would also treat purchase money mortgages and refinancing mortgages the same, and all AMA loans would count, including government-backed loans from FHA, VA, and USDA. All right, moving to my favorite slide. So this slide is very important because it looks at how the bank mortgage purchases fit the proposed goal historically over time. And this chart shows the percent of AMA loans that meet the criteria of the housing goal, bank by bank, from 2011 to 2017. And the dotted line you see there is the 20% target level in the proposed rule. And you notice how most banks in most years, for most of them, 20% was demonstrably achievable. The chart also shows 3 banks below that 20%, and without identifying any of those banks individually, we can see that those are the ones below 20% only started AMA activity in the last few years. And this variation in performance likely results from the volumes of AMA purchased by individual banks, different focuses by different banks, district-level differences in the housing markets, and that banks under $2.5 billion under the threshold have not been motivated to meet the affordable housing goals. All right, a little bit more about the small member goal. This goal focuses on the unique mission and homeownership structure of the banks, each of which is a cooperative owned by its members. Small institutions are central to that mission. What do I mean by small institutions? The proposed rule uses an existing definition of community financial institutions, those with assets less than $1.173 billion, and that's adjusted periodically for inflation. For AMA loans, we talked about participating financial institutions, which are bank members approved to sell loans through AMA. For many of the small PFIs, the federal home banks are their primary or even only way to access secondary market liquidity. We also observe that small institutions are more likely to sell mortgages through AMA that are to low-income or very low-income borrowers. When we compared data from 2017, we found that 21% of the loans small PFIs sold through AMA were to low-income or very low-income borrowers. Compare that to 17% for large PFIs. So to encourage the banks to remain focused on serving small institutions, the proposed rule sets a goal that small members should be 50% of AMA users. If a Federal Home Loan Bank is below 50%, it can show significant progress by increasing the percentage of small members by 300 basis points during the year, and I'll show you an example of how that plays out on the next slide. All right. So now we're on slide 11, which shows how the small member participation goal would work. The chart shows how the banks would have performed on this goal in 2017. And the second column here shows small members as a percent of AMA users. And as you can see, 9 of the 11 banks were above 50%, many of them well above 50%. That's different, by the way, than comparing to the entire bank membership. Those numbers are in the last column just for context. Not all bank members use AMA, and this goal only compares to AMA users, not the entire membership. Notice that 2 banks were below 50% in 2017, but that wouldn't necessarily mean they were necessarily missing the goal. If a bank shows annual progress towards the goal of 300 basis points, that's sufficient. So the chart shows that banks B and E would only need to add 1 new small member using AMA, all else equal, to meet the goal. Okay, slide 12 lists a few of the other changes. The goals would be more achievable for the Federal Home Loan Bank if they could count the FHA, VA, and USDA loans they purchase, and the proposed rule would allow that. The rule would eliminate the current confusing treatment that I described earlier about out-of-district loans. And I'll talk more about this on the next slide, but the low-income area loans could well, I'll talk about this more on the next slide, but to set it up, one concern we had was that the low-income area loans could overwhelm the mortgage purchase goal. And unless we limit loans to higher income borrowers above 80% AMI from counting toward that goal. So the rule proposes a cap on the number of loans to higher income borrowers that can count towards the goal. And I illustrate that on slide 13. So the existing definitions of families in low-income areas comes directly from the housing goals for Fannie Mae and Freddie Mac. And under that definition, loans to borrowers up to 100% of area median income in minority census tracts or disaster census tracts counts towards the goal. It also includes borrowers of any income level in low-income census tracts. Because the mortgage purchase goal groups all the loans together, one category could potentially overwhelm all the others. And the blue bucket here represents the low-income area loans, and the picture shows it potentially growing much larger than we saw in the previous picture. So the proposed rule would require that at least 70% of all mortgages that count towards achievement of the mortgage purchase goal be for borrowers with incomes at or below low income, or 80% of AMI. Stated differently, no more than 25% of the mortgages a bank uses to qualify for the mortgage goal could be to borrowers above low income. The proposed cap would not prohibit the banks from purchasing mortgages from borrowers with incomes above low income. It would just simply limit the extent to which those mortgages could be counted towards the goal. All right. So I wanted to leave plenty of time for comments. So, or questions, I'm sorry, and comments. So that, I think, finishes my summary of the proposal and some of our reasoning behind it. Let me just remind you again, comments are due by January 31st, which is next Thursday. And we very much would like to hear any comments or reactions that people have. Are there any questions?
We will see. We will, you all want to no longer see my screen, so hold on just 1 second. And we will check with questions.
Where can you find the deck? You can, I can make it available to you, Tristan. You can post it. Is that the best way to do it?
If you want to make it available, we can send it back out to attendees.
Yeah.
If you're okay with that, we'll make it available to those who registered for it.
Yep.
And make sure if you provide us, NSC will provide it.
Okay.
To do. And then we have another question. So, just for everybody's reference, in case anybody else has any other questions, the question is, how are manufactured homes treated?
Both chattel and backed by real estate.
Yes.
That's a great question. Manufactured homes backed by real estate certainly would be treated like any other. I don't know if under the AMA program makes purchases for chattel. I suspect they do not. So we have not sort of thought through that question, but I suspect the banks are not purchasing those under AMA.
Sorry, let me try to miss anything. Our slides weren't advancing at one point.
Well, if I were advancing them, they were advancing. That was me.
Okay, so we have, are we able to determine if our bank is one of the 3 banks currently out of compliance with the proposed change?
So I would answer that this way. No, we did not include the names of the banks on purpose. However, I mean, I think it's important. The 20% that is in the regulation works for a number of the banks, but it's also, it was also very important in structuring this. Or I should say, as we worked through it, we realized that the banks use their AMA programs in very, very different ways. And so one size fits all was something that we really struggled with. What we ended up with was the 20% in the regulation and the option for banks for whom that 20% isn't really feasible for any number of reasons, if they're just starting recently or various conditions in their district or what have you, that we had a process for coming up with a process that was different from 20, but that still met our priorities, which were that the AMA program should contribute in a meaningful way to affordable housing and should be feasible for the banks. So that's a long answer to your question, but no, we're not. We left that without names on purpose.
What about community land trust and leasehold mortgages?
Yeah, I just don't know. I apologize. I don't know the answer to that. I don't know, again, if those things are purchases that the AMA program is making, but I can take that back and I can relay the answer to you, Tristan. We'll get it very quickly.
And for the record, to all of you who asked questions, we do know that the individual who has asked that question, so we'll make sure to follow up with you directly on the answer that you, on your question directly. And it appears that I have run out of questions. If anyone else has any, please feel free to chat them at some point. I'm going to give folks a few seconds.
Yeah, I mean, any loan that is purchased under AMA counts towards, the goal, counts towards the percentage. But I don't know if those are purchases that the AMA makes.
For follow-up, if there are any follow-up questions to the proposed rule change or any policy questions that you all have, please feel free to email me directly, and my information is online. But for those who would like it, it is T as in Tom, Breaux, BREAUX @nhc.org. However, we will also send out contact information for everyone in a follow-up email for those who have registered for the webinar some who didn't attend who can still have follow-up questions for us so we can get those over to Ted and answered as expeditiously as possible. Again, we will reiterate the fact that the comments are due on the 31st, and so if you do have immediate questions, NAC Policy Committee staff will be monitoring emails throughout the weekend, and so please feel free to email us throughout the weekend to make sure that you get all your questions answered. Not to Ted's going to answer them on the weekend, but at least I want to make sure that we get as many questions answered as possible before your comments are due on the 31st. And I do not see any additional questions, and so with that, we are going to close out this webinar, and we appreciate you all for taking the time to jump on and hear directly from FHFA on the proposed rule change. And with that, thank you so much.